great jobs report on Friday. It looks like the economy's, back up and running as expected. That plus the upcoming Fed meetings, it's really just silly money now that can bet on a rise in interest rates. I guess the question would be how much?
Well, it's pretty much assured we're going to have the interest rate increase, like you said, and smart money is a quarter point raise like we had last time. To go above a quarter point would be too much of a shock to the system, even though theoretically the system probably could handle it, but it would just cause havoc on the street. And even though the Fed's job really isn't to worry about the market, they have to worry about the market. So like we talked about last week, the big issue will be what they say about when the next increase will be and how many, if they still plan on having 3 this year, which with job reports like we saw on Friday, you would have to believe that there are more coming because this was a great jobs report. It's great for everybody. The only place it's really not great for is the stock market because it means interest rates will go up and a lot of the money that's been flowing in for dividends, they'll start going into bonds because they can get this, they can bring in the income without the risk of stock price and volatility.
Long term, a correction would be a good thing, right?
It would be great. I mean, we can't go straight up. That's just it doesn't make sense. We've got high PEs in a lot of stocks. A lot of big stocks are trading at 2017 top price ranges where a lot of these big houses have their estimates of where the stock will be at the end of the year. They're already there. So getting a pullback would be great. Letting the market sit there and consolidate. You've got a lot of money on the sidelines and lets people get in at a fair price.
I guess the other question would be, what would you expect number of rate increases we can expect for the rest of the year?
I believe they're going to stick with their original call of 3 rate increases for this year. We're going to get the one this month, and I believe we'll probably see one sometime in the summer, and then we'll probably see another one at the end of the year. It was all based on unemployment, which looks great, and the economy, jobs are flowing, so wage increases, wage number is increasing, so that's a good sign. So we're kind of right there in our wheelhouse of where we want it to be to increase rates, which again, that's a good thing for the economy because when we get the next downturn, which we will, at least they have some ammunition to help a recession by lowering rates again. Without raising rates, we can't fight a recession by lowering rates.
Well, I guess the last question I've got for you then is, what are you telling your clients right now? What should investors be doing today?
We're still doing the same thing. We're still holding strong. The market's already factoring in this rate increase. We'll see what happens after they talk, the Fed talks, and when they release the rate increase. And then we're just watching all the, all our statistics, all our quantitative analysis, and the trend is still moving higher. And until we get a directional change, we're not changing any of our allocations. There's really no reason to make a change. But at some point, probably this year, that will change because if they keep raising rates, money will start flowing out. And you know what? We're due for a good, 1-year pullback or consolidation, a quasi bear market. And remember, bear markets can last 6 to 9 months. It's not the end of the world to have 1 year where we're down 10, 15%. That's not a bad thing.
Well, I think there are going to be a lot of people sort of asking what to do when the Feds raise the rates, if that is truly what they'll do next week. When they have those questions, how do they get a hold of you?
They can always email me directly, Mickey, Mickey, at Envestim, Envestim.com. They can follow us on Twitter at Envestim1. They can follow our Facebook page at Envestim as well.
Terrific. Mickey, thanks as always. We'll talk next week.
Sounds great, David. Thank you very much.